Hello folks, welcome back to another video. Today we're going to look at options a little bit more due to a comment on yesterday's video. We're also going to take a look at the copy trading, which was profitable. So if you saw yesterday's video, you know that today, which is the 2nd of July, we are already profitable, and that is very, very fantastic to see. So this and a little bit more in today's video. Let's jump right into it. So as always, we start with the prices of our assets. So Bitcoin back at 107, which by the way, Robert Kiyosaki says is still very cheap. Again, Kiyosaki can have a little bit of hot takes here and there. You know, he's the guy who wrote Poor Dad, Rich Dad. So he's saying that he's still buying Bitcoin because 107 is a steal to buy Bitcoin at. So Ethereum is at 24.46, XRP at 217, BNB at 657, Solana at 148. So if we look at the liquidation that we were talking about yesterday, you see that we actually went below the 105,500 and we went almost at the 104. So we saw that little liquidation that I talked about in last video, and now we're looking at the top, which is around the 108,700. So again, we have a lot of liquidations, smaller liquidations here that could hold Bitcoin from reaching this heat spot right here, bright yellow, because once you have a little bit of a liquidation, as I said, there are orders trying to sell, trying to short Bitcoin at the specific price where liquidations are going to happen. So that triggers a little bit of an upside squeeze and then a huge downside correction. Just like you saw right here, you can see, let me actually zoom for you guys. There's a little wick that shows that price went down and up really, really fast. That was because there was a liquidation that triggered multiple liquidations and then multiple, in this case, buy orders that brought the price back up. So this is what happens when there's these green areas right here before the yellow area. So now looking at Bitcoin, we bounced on the 4-hour chart. We bounced right at this 200 moving average. So the 200 and the 100, as I said in last video, they are almost together, which is good because it makes for a very strong place to rest. You know, Bitcoin rested there and now it has the strength to hopefully go back up at the 108, 109, and maybe new all-time highs. So that is what we're waiting for. And for Ethereum, we are on the opposite side of the spectrum. We are below the 200 moving average. We are a little bit above the 9 and the 100 moving average, but this right here is what's going to hold us back. So we have to keep an eye on the 200 moving average because it was going to hold us like it did right here, and most likely like it will do right here around the 2500. For Solana, we are holding right here, still between the 100 and the 200 moving average, and that is not very good for us because it is kind of holding us. The RSI is right in the middle of 48.50. It means that there is no direction. There's no prediction on where it's going to go. So we have to wait for something to trigger a movement on Solana. That could be passive due to Bitcoin and Ethereum moving. That could be active because of something that happens on the Solana network or with Solana as the Solana Foundation or Solana as the coin or blockchain that would actively make Solana move either up or down. It depends. So regarding liquidations, not much change. 240 million in the past 24 hours and 67% of those were long positions. So if we go now to options, let's start with copy trading here on Bitopics because we made 0.55% in the past 24 hours. So that is huge for us, huge if you have deposited, and if you have not, guess what? You're missing out because a lot of people are making 94% if they were in this strategy since it started, which was last year in May 2024. So if you started in May 2024, you would have made 94% on your money, and that is on your stable coins, on your dollar. There are no banks where you can keep your dollars. There are no bonds, no T-bills, doesn't matter. There is no place where your dollar can earn that much money unless it is with crypto and unless it is with something a little bit more risky than just by holding the stablecoin or getting small yield out of, you know, Uniswap V3 pools or anything like that. This is active trading. So we're making that money actively. There's someone trading that money for you. And this is why we have these huge returns. So going back right here, we can see that almost 700 people are using this and we have almost $3 million here in assets under management. So if you want to be part of this profit, you know, being very profitable with USDC or USDT, you don't have to do any trading unless you want to. Of course, you can get higher returns if you do that yourself, as I showed in the video before. But if you want to make it passive for a small fee, if you scroll down, the first link in the description will take you to the register page of Bitopics. You can log in, create an account, deposit, no KYC, and you can start trading right now. So I'm looking right now at the last video's messages, and Crypto Ricardo, for example, he said, indeed premiums are low, but instead of increasing my risk, I lower my return. Luckily, I don't need a percentage per week to survive. I know that some weeks will be more and some will be less, and this is part of the game. He has a correct opinion, but I'm going to show you that sometimes they are the same. You get more risk even though you're lowering the returns. So it is not just, oh, I'm gonna lower my returns and so I'm safer. No, let me actually show that to you right here. If we go to options Ethereum and we scroll down, you see that I have my position open right here. It is a put spread, a put credit spread, as we like to do in this channel. Oh, I wasn't even showing. Here we go. It is a put spread, put credit spread. You can see right here. I sold at 23.75. I bought back at 23.50. So 40 contracts, and I'm using $12,000 in margin. That is a lot. So if I'm not mistaken, we're making around $16. So we're making 16 bucks, and we have $12,000 in margin. That is a whole lot, I admit. But if you calculate the maximum risk, which is how much you can lose at most, you're gonna have to do the spread. So 25, because we sold a 23.75 and we bought a 23.50. So 25 times 40, which is the amount of contracts, and then you deduct the 16.40, which is the premium that we have, and that gives us a maximum loss of $983.60. That is the maximum that we can lose out of this $12,000 that we deposited. So why is that such an important thing? Because if you calculate the ROI on this, the ROI on the total margin that we're using is 0.13%. So you're only going to be making 0.13% because of the IV so low. And if we actually go back right here to Ethereum and we see how far away 23.75 is, we are going to be looking at, there you go, we're going to be looking at 3% away from the current price. So we're making 0.13% for only 3% movement. Of course, we're not going to have much movement because IV is low. When IV is low, markets are kind of slow as well, but it is still a very high risk. So we said, hey, we lower the returns, so we're safe because we're not going to chase high numbers, but we also increase the risk nonetheless because we're still very close to current price. But if you look a few videos back, let's look like 4 videos ago. If we look 4 videos ago, when IV was above 70, we had 5-6% gap between the actual price and the price that we sold our leg. And guess what? We were making 0.6, 0.5, 0.4%, not 0.13%. So you can see where I'm going with this. Even if you lower your returns, you are still bound by the options that we can sell right here on Bitopics or on any other place. You see, we cannot go below the 23.50, so we cannot sell at 23.25 because we don't have a quote for that option. So this is what I'm trying to explain, not only to Ricardo, which is a good friend of mine, but also to everyone, so you can understand that sometimes either you don't trade or you have to take these risks, because the closest one that I can sell right now is the 23.75 and the 23.50, which is what I did. So what I would personally love to do, I would have sold the 23.50 and bought back maybe the 22.50 or the 22.75. So this way I have way more room to play and I will be way safer. As I said, I usually go for 5%. So if we were in the 70s with the IV, 5% would be what? 5% would be 23.20. So $2,320, that would be around 5% from current price. That would be an interesting option to sell, but we don't have that. We do not have that strike available. The 23.25 is not available for us to sell right now because liquidity and strikes get even lower the lower the IV is. So sometimes the better trade is not to trade at all. It is the smartest way, even though you're lowering the risk. It is still something that can bite you in the butt. Hopefully that was able to explain everything. And with this, I'm going to close today's video. Hope you guys enjoyed. Hope you guys are profitable. If you sold an option, either calls or puts, please stay safe. And if you're sold naked, please buy back something farther away out of the money just to, protect your assets, protect your capital. Because if something happens that the price moves against you, the leg that you bought will protect you from maximum destruction of your portfolio and your capital. Hopefully this was insightful. Again, I am owing you a video for the spreads because I saw a few people commented spreads on that video where we talked about opening spreads, how I do my due diligence. So that one is going to come soon. But that being said, I'll see you guys on Friday for another one. Take care. Peace.